United Auto Workers to expand strike if talks don't yield progress soon. So the negotiations are going on. Even if they're not going on, the market is watching. The market is watching. Do you know why they are watching? Because when the negotiations are, when they reach an agreement. When they reach an agreement, obviously, if they reach an agreement, it's going to mean they are going to increase prices. I heard one automaker has already agreed to 21%, but probably they don't want that. But look at what's going on here now. It's not. You may think this is the end of the world. You think this is very, 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 very bad for the markets. You may think so, but no, it's not that bad. It's not. It's not really bad. As a matter of fact, it can be good for the auto workers. Let's put it this way: it can be good for market participants. It can be good for them. The auto workers, the automakers, for them, if they agree anything, if they agree 31%, whatever it is, what are they gonna do? They just hike the prices on the vehicles. And you know what? When they hike the prices on vehicles, they will not just, if it's 30% they increased, they're not just going to increase their prices by they're going to increase their prices in such a way that maybe even their profits will even increase. But that aside, if they increase, they're going to increase their prices, and that is going to delight the market, to just put it simply. And you may have heard that inflation is the best hedge. Rather, the markets, the stocks are the best hedge for inflation. And this is a good case of inflation. This is a good case of inflation. If they accept to give them the 30% increase they want, that's inflation, because automatically that's going to go into the price of vehicles. That is also going to translate to other things. So this is a typical case of stocks being a hedge against inflation. When the prices go up, it will impact the stock. Market participants are definitely going to cheer. They're going to buy the stock. It's going to impact on the stocks. Okay, so this is what's going on right now. We have Ford at the moment now at stand. Yes, the moving averages are the auto regression on the 10-day moving averages are predicting that we're going to have a decline all the way down to up till Monday the 25th of September, but it's going to slightly look up. There are downward projections on Ford. There's 1155, there's 11.6, and there is 9.01, but there are way more upper projections all the way towards $18.35. Below that is 15.78, and it's actually on this 1-day chart. Even Ford is not that bad. It's 2.03%. Things are going. The strike is going on, the end of the world. But no, Ford is not going down. It's not collapsing. It's not. Let's have a look at GM and see what's going on there. Ford was up 1.92% or thereabout. GM is up 2.19%. GM, the 10-day moving average is expected to move sideways, up just like Ford, and after Monday the 25th, the 10-day moving average is expected to tilt up a bit. Right now as well, it's like I said, up 2.19%, just like Ford. There are two downward projections. There are way more upper projections all the way. The maximum we have is around just slightly below $48. Below that, for that projection is 41.60. Below that is 39.51. Below that is 37.93. There is 36.79. All of these prices, these are some of the prices it was trading at sometime in August, not just a few weeks ago. This is not the end of the world. This is not the end of the world. This strike, as a matter of fact, is probably going to be good for those who are holding these stocks. All in all, a sideways movement is projected on this daily chart for these two stocks so far. And let's look at the weekly chart and have a look and see. On the weekly chart, we have okay, there's a downward projection on the weekly chart for GM, but you know, there are upper projections just pretty much similar to what is on the weekly chart, on the daily chart. So let's return to the daily chart on GM. You know, so there is a sideways movement is, I think, on the cards, but I mean, a collapse is not really what you're going to see. You know, for sure, you're not going to see that. Prices are going to go up, and that's good. The earnings are going to be different. Prices, that's what market participants want to hear. They want to hear that they are getting more revenue from their vehicles. If the unions want more, they're going to increase prices. They're not going to leave it like that. You know, so let's look at Stellantis, STLA. We have STLA is actually up 2.27%. You know, it has unfortunately, in the case of Stellantis, has way more downward projections, because it's still very much showing strength. It's still very much in trend mode. I think Stellantis, it's I would say still the upward bias is still very much there on Stellantis. You know, since as a matter of fact, since all the way down to, I would say, so all the way down to, let's get it now, since all the way down to October of last year, this stock is in strong bullish trend. As a matter of fact, the 200-day moving average upward sloping as things stand right now. You know, so as a matter of fact, it's the peak of the last 52-week high of 2.55. The stock is just not far away from there. You know, and this is at the time. You know, some are trying to say that, trying to insinuate that this strike going on right now is the end of the world. No, it's not. As a matter of fact, it actually bodes well for those who are holding, or who might be holding, or who plan to hold some of these auto stocks. You know, so let's look at this. Let's look at Honda, HMC. Honda is in a very strong bullish trend, very strong bullish trend, trading above all of its moving averages, and you know, it's up 4.13%, up 1.43%. The auto regressions are indicating that the 10-day moving average might decline. You know, that's what they're indicating. You know, Honda has been accelerating, is just not looking back at all. You know, and let's have a look at Toyota. We have two of them, TM, and okay, same thing as Honda. Strong bullish trend, just slightly below its most upper projection of 197.13. Same thing as well. There's the auto regression on its 10-day moving average is indicating that a decline is expected all the way down up till Tuesday the 26th of September, but it's expected to spike again by Wednesday the 27th. Okay, let me go back and see what HMC is saying there. HMC Honda, I think pretty much the same thing as well. By Wednesday, it's expected that it's going to rebound. It's a 10-day moving average. And then Toyota, there's another Toyota stock, TOYOF. Okay, same thing as well. Strong bullish trend as well. Strong bullish trend. And there's the same thing as well, auto regression on its 10-day moving average decline, and also decline in the coming days. Okay, but let's also have a look at Tesla. Tesla is not in the unions, but just like them as well, suppose 10-day moving average expected to decline and then look up, but just the same thing. So similar pattern. So as a matter of fact, all of these are benefiting auto stocks. These strikes are just benefiting auto stocks. And then on Tesla we have upper projection of just below 300 and 300 and let's hide this and get the projection. Okay, we have to leave it on to see. It's just, I would say, the upper projection is just maybe I would say around $315 for Tesla, the most upper projection. There's a downward projection where it is right now, just slightly below where it is, $261. And then down here we have another one, 241, and then down here we have 228, all the way down to 121.02. Okay, so auto strikes actually bodes well for auto stocks. See what you make of all of these and know how you're going to play this market. Thank you very much for watching this video.